You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Daniel O'Brien. Daniel, thanks for joining us today.
Thank you very much, Shelby. Appreciate it.
Daniel, starting off our market conversation, as we commonly do, how are futures looking?
Well, futures have, after a time of rallies across the board, in about the last week have kind of topped out. We've seen some real volatility in the soybean market. Some days up 25 to 30 cents, and then days like yesterday where we ended up being down about that same amount. So it's interesting. We update these reports that we put out, the analysis that we do on a week-to-week basis, and after all the volatility that's happened, we're just about the same place as we were a week ago. So we're volatile and in general moving sideways until further notice. So interesting to see the numbers as they are. Again, we're Dees corn, 25 corn closed yesterday about 428 three quarters, down about 6.5 cents. We're For me, we're looking at Dees corn of 25, comparing that to an uncrop risk tainted number a year from now. Dees 26 corn harvest is about 463 and three quarters, so about 40 cents. So you wonder about to what degree is uncertainty about supply demand conditions next year worth? Well, apparently it's about 40 cents in the market. For soybeans, soybeans had been higher, again, up about 40, 50 cents from where we were not that long ago, had jumped up uh, for the November contract at 1091 and a half. Of course, now November is in delivery. That's the time when those that hold long and short positions seek to even up and to not make themselves vulnerable to delivery or not to deliver, whichever they want to do. They try to offset their positions. Well, sometimes they can, sometimes they can't, depending on the competitiveness of that market. So now we're looking at January 26th. January 2026 as the lead contract, and that is over $11 at 11.08 yesterday. But again, on yesterday's trade, given the ups and downs of export news right now, euphoria that soybeans are moving on U.S. ships to China, and then news that, gosh, the Chinese are shifting around their sources. It was down 26 and a half cents yesterday, had been up about that much or more earlier in the week. So just volatile now until things really get sorted out. And for Kansas hard red winter wheat, on yesterday's close, the Dees contract it settled at 522 and a quarter, down 17 cents. So again, not seeing a lot of direct trade from China for U.S. wheat in general, but the general tone of the world market is such that kind of had seen that there have been some news reports out of Russia or from observers of Russia that talked about them increasing their exports in the coming year. Of course, Russia, Ukraine are both cash strapped in the middle of a shooting war, literally. So when they have commodities, they have a real incentive to generate cash by selling whatever crops they produce. And that there were some rumors here recently that had come out. It is interesting to see. Again, D's 25 lead contract 522 and a quarter, but then July harvest, July 26 hard red winter wheat at 559. So it's about 35 or so, 35, 36 cents higher. And again, that's I guess, how we might gauge the amount of uncertainty in the market from here out to July. That July is again somewhat higher than the current. So you got that, and no out of the ordinary stories with regard to carry. The wheat futures market for hard red still shows carries, but they're more like 4, 5, 6 cents, as opposed to where they had been in the past, not too distant past of 7, 8, 9 or more or thereabouts, in terms of carry from the D's to March to May and July. But so we kind of see that as it is. I would say that when you look at the ethanol cash corn prices, that they are that almost in almost all states to the east, Illinois, Indiana, Iowa, You're seeing cash, and well, pardon me, and also Missouri, Ohio, uh, and the like. You're seeing prices above $4 at ethanol plants. So that's some indication of either demand for ethanol on the one hand, or the uh, the outcome of harvest, whether we're extremely plentiful or not. And so that's I guess a positive sign for cash corn markets going forward, and really probably an indicator of what the market at least thinks it's perceiving with regard to actual U.S. corn harvest results this go around. So interesting to watch. I would just mention, if you don't mind, the cash markets again. Cash corn at elevators in Kansas. The highest bid, we had one or two bids at over $4 in that out in Garden City. The top bid about 416, several others about 10-15 cents below. So at least some higher bids in for cash corn. The new crop bids for next year, highest also out there in the Garden City area, Southwest Kansas, about $4.60. Next highest bid's $4.30 in Colby, 420 in Salina, and 430 in Hutchinson. So interesting now that I don't know that you can say we've turned our attention to next year, but some of the better bid opportunities that we're seeing in corn are their forward contract bids for next harvest. So go figure that. We're also watching as part of the U.S. China discussions, the pace of exports. And I think anybody that has grain sorghum in Kansas yet to harvest is hoping for a strong recovery in U.S. China trade, and particularly with regard to grain sorghum. We do have some reports that have come out on the ag wires of China being active, bringing at least one load pardon me, from the U.S. to China, and probably a harbinger, a signal of more to come. So, um, as you and I have talked in past weeks, Shelby, that couldn't come at a better time for U.S. grain sorghum producers that are likely going to have, in a lot of cases, at least decent, if not pretty good harvest yields, and if there was some strength in the basis levels for grain sorghum here in Kansas, for them to consider selling into, that would be a great help for them, no doubt. Soybean bids, again, cash bids above $10 in the, well, 1028, top bid in Pittsburgh area, 1023, Salina, 1018, Topeka, 1013, in Hutchinson, out to the west. Not a lot of cases, well, we just don't grow a lot of soybeans, but what bids there are lower than that. And finally, for wheat, do see a cash bid in Salina, $4.52 is the top bid that at least I'd seen in the locations that we watch. 442 in Topeka and Hutchinson, and then oh, thereabouts, 432 out to the west, and in Colby, and 422 in Pittsburgh. So it's interesting. In Southwest Kansas, I didn't see many bids. Of course, right now they're bringing in feed grains into those elevators. So it's kind of surprising in Southwest Kansas right now to not see a lot of wheat bids in some of these key locations, especially around the Garden City area. But again, we've got corn to deal with right now, and they just as soon not I'd like to keep things, I guess, as direct and as simple as possible, and not have a wheat coming into what's a pretty strong outcome for corn. So interesting to watch.
And as we've been talking through reports, one report we've been waiting on and hopeful for, excuse me, crop production report. And is that something we're going to see in a week?
The USDA came out this past week and indicated that although they were not going to meet the time frame for on November 10th, which would be Monday for a USDA WASDE report, they are aiming for the 14th. So there'll be both a crop production report and a WASDE report, which means in order to make the deadline for that, to have a from the National Ag Statistics Service, to have crop production numbers, yield, production, et cetera. They're out in the field right now doing their measures and contacting farmers. Although most farmers are pretty busy at the moment to fill out surveys, but still, so no doubt that's happening, and then happening at this time, and then as we're speaking, or we're on the tail end of it probably, and then come next, well, a week from today on the 14th, then we'll have that WASDE report. I think that there's a lot of potential for volatility that could come out of that report on both the supply side. Do we meet the expectations of generally lower corn yields and perhaps lower soybean yields coming into that November WASDE report now delayed? Will that come into play? How does the USDA gauge usage? It looks like ethanol usage has been pretty strong. We anticipate livestock feed usage probably still okay, although there's controversy with regard to foreign beef sales, but we won't get into that issue. That's a grains deal. But point being that I mean that's a livestock issue more so. But exports, we really haven't had specific information other than rumors and an article here or there as to what we've actually been shipping during this time. So when we do get the USDA reports coming back from the Foreign Ag Service with regard to export numbers, really am curious to see what's been happening for wheat during this time frame when we had the government out of the business in terms of making reports, and also if corn exports have kept up the pace, what's happened with soybeans and the like. So just a time when they're again with trade deals and expectations of movement or lack thereof from different countries coming into the market, and really no hard data from the USDA with regard to what's actually been happening. We're just primed for a time of surprise that could come a week from today in that report. So when that thing comes out, we'll bring the pre-report expectations into that, and then as soon as we can thereafter, that we'll you and I and perhaps Guy Allen will get together and do a post-report discussion of where we're at now once we finally have harder data and what really from my point of view what that may mean for post-harvest grain storage options. Yeah, because again, we have sizable amount of grain. Do we have enough demand up front and prospects down the road to store grain to wait for it, or should we? Is it a wiser move to go ahead and move it and move on to next year? I guess we'll try to answer that question.
Daniel, I appreciate you taking the time to join us today.
Thank you so much, Shelby. Take care.
That was K State grain economist Daniel O'Brien. We're cutting to a short break now, but we'll be right back.